most other types of insurance is actuarially stable. Not always predictable, but actuarially you can analyze it.
Right.
You can't really do that for war. And then the one thing I think is important to note, and this has been a topic of discussion, I think, on the war side, is that during the year in peacetime, it's very cheap.
Yeah.
Okay.
Yeah.
It's very cheap. And so I know that there was a lot of talk about the cancellations and stuff like that. It's really, they have to do that because they're not underwriting based on the ships transiting war areas. They're underwriting based on trading in peaceful areas. So once an area then becomes subject to a war act, they do have to be able to re-rate that. And so even though they gave a notice of cancellation...
So these are the headlines we saw at the beginning of the conflict saying that like war risk insurance has been pulled right at the start of a war, which was very confusing for a lot of people,
confusing.
me included.
Yes.
I was getting Instagram reels sent to me of people trying to explain it, and complete misconception. And when you're getting reels on P&I insurance, it's, you know something big is going on.
Hello and welcome to another episode of the Odd Lots podcast. I'm Tracy Alloway.
And I'm Joe Weisenthal.
Joe, you know I'm slightly obsessed with insurers.
Yeah.
Maybe obsessed isn't the right word, but fascinated, appreciative of insurers, because I think there's a tendency to think of them as sort of limiting factors in the world. So, you know, if you can't get insurance in California, you can't build a house. But I also think of them as enablers of certain behaviors, right?
I think that's a really good way to put it. People do a lot of things that they wouldn't otherwise do were they not able to get insurance on it. So yes, it does cut in both directions. So we should appreciate the existence of insurance.
All right. Well, now
actually, you know what? My daughter actually.
Your daughter has insurance?
She asked me to explain insurance the other day, which I was like, you know, and then suddenly I was like, oh, I have to explain.
Wait, first of all, tell the listeners how old your daughter
She's 10.
is. Okay.
I can't remember the context exactly what it was. Maybe it was something about fire insurance, etc. But I think I was actually pretty proud of myself. I was basically like, there are these risks that happen where, like, say if your house burns down, you could like ruin you financially, but it doesn't make sense to like save all that money in cash and always have that much savings available to be able to rebuild your house. And therefore, the way you solve it is by paying a small amount. I was like pretty like happy. I think she got it.
I'm glad she's planning for home ownership at an early age. Okay, well, now is a really good time to think and appreciate insurance because, as you know, we are recording this on April 8th. I feel like, do I need to say the hour? Maybe I do. 12:06 p.m. on April 8th. It is not entirely clear at the moment what is going on in the Strait of Hormuz.
Right.
We don't know if ships are being allowed to pass or not, but we do know since the earliest days of this entire conflict happening that one of the issues that's come up is war insurance and maritime insurance in general. Yeah,
and we sort of like touched on it in our very first episode that related to the war. But of course, one major reason why ships haven't been moving through is the direct threat of being attacked and sinking. But then another element is the entire insurance element. And then beyond that, like that adds cost to everything. And it's not, you know, how do you price war insurance? I have no idea. So I have many more questions on this topic.
Yeah, the whole ecosystem of maritime insurance in general, you hear these things thrown around like whole loss protection and liability protection. And there's the reinsurers, and then there's the normal insurers, and then there are insurance clubs. Right. There are all these different
I want to be part
players.
of an insurance. It's like you belong to the Soho Club. Me, I belong to an insurance club. Like, think of how that's...
You kind of have the club jacket thing
going on. I'm wearing a
jacket
jacket today
at the moment. Okay, well, we do in fact have the perfect guest to talk about all of this. We're going to be speaking with Dorothea Ioannou. She is the Chief Executive Officer of the Managers of the American P&I Club. So
amazing.
You can ask her if you can join.
Can I join?
As well as
I need one member to endorse me and another one. That's how it works at these clubs.
All right. Well, the second member who could potentially endorse you is Steve Ogullukian. He is the Reinsurance Director at the American P&I Club. So truly the perfect guest. Thank you so much for coming on Odd Lots.
Great to be here.
Thank you for having us. Thank you.
Why don't you go ahead and tell Joe what is an insurance club and can he be part of one?
Okay, great. First of all, I love that you talked about insurance, especially from our perspective. Clubs, we're enablers. So what are clubs? Clubs in our context, the P&I Club, which means protection and indemnity, is a collective. It's a not-for-profit assessable mutual association. It's not a commercial insurer, and it basically historically is a club that brought together ship owners in the industry that were trying to fill a gap. So they came from a need for society. And really what clubs do is, while they insure the owner, they are protecting society because they are insuring the owner for what you referred to before as liabilities. Right. So that would be like losses or damages that they cause to other people, not to themselves. So the clubs never pay own damages. Okay. We will not pay damage that occurs to the vessel in an accident, or if they have economic loss, their own economic loss. So what P&I clubs do is they step in and they protect the owner and defend the claims, but they ultimately pay whatever is the fair compensation or whatever is adjudicated for passengers that perhaps get hurt on the ship due to negligence of the ship. Claims from crew that might get hurt in an accident. Liabilities related to collision. So if the ship hits another ship and they cause damage or personal injury to that to people or crew on the other ship, they'll pay that. Oil pollution, environmental damage, so cleanup related to that. So basically, the way we like to think about P&I, and you really should think about it like this, it's the safety net, and it is the only way that a ship can trade. So, for example, let's look at what you do with your car, right? You're not allowed on the road if you don't have liability insurance, right? Right. You don't have to have own damages insurance, right?
Yeah.
But you do need to have liability because we need to know that all the cars on the road have financial security behind them, that if something happens and somebody else gets hurt, there's compensation that's going to come from somebody that's responsible. So that's the concept, let's say, of a P&I club.
And you mentioned that it's structured as a nonprofit. So I take it that you're doing this just out of the goodness of your heart. No, that's a joke. But talk to us about
what's the concept behind it?
Well, so why is it that, and then who is bearing the risk for which they're taking a profit?
Okay, so let's go a little bit to the history of it so you can understand it.
Please.
So basically, if you go back in time, let's say up until the 1800s, up to a certain point, there was no liability for most of your marine liability insurers. As things started to change and they started to impose strict liabilities, regulatory changes started to happen in various countries, passenger liability started to increase, and also the liability started to get a lot more volatile. Your regular commercial insurers did not want to touch it. They couldn't price it. They didn't want to deal with it. And also, your classic policy would have a limit of the value of the ship. And a lot of times liabilities would exceed that.
Oh, yeah.
So what happened was the ship owners came together to say, well, we can't allow, like you said before, number one, you can't put all of this money aside until the time is needed. And you also can't risk becoming financially destitute, right?
Yeah.
In the instance that you have a catastrophe. So the ship owners came together and said, let's pool our risks. So the not-for-profit element is this. So the concept goes to, in principle, we each put a certain amount of money into a pool. It's based, let's say, on
club
factors
members.
that they agree, club members. They have to be ship owners, by the way. So if you do have an ocean-going vessel, we could consider making you a member. Just to say. So there's a formula or an underwriting formula where everybody pays a certain rate per ton, okay? And then dating back to the beginning of time when they started this, if all of the losses were less than the amount that they had put aside into the pool, then they could either have it returned, or they could save it for the next year and pay less the next year. And each year there would be a reconciliation, but if the losses were more, they each had to put in, pro rata based on their tonnage and based on the formula. So that's the concept of not-profit. Now, of course, back then, regulation wasn't the way it is today. So now you're not allowed to just keep enough to pay your losses. So now there's regulatory requirements. So now the not-for-profit has kind of increased to, you need to be healthy not-for-profit. So you have to meet certain solvency ratios under regulation. So that's the concept. I don't know if you wanted to add anything on that.
No, but ultimately it's providing at-cost insurance for the members of the club. So like you said, you want to join the club. If the four of us have vessels and we want to form our own P&I club, you could theoretically do that, pool our money together, as Dorothea said, and say hopefully it's enough to meet the claims for the year. If not, we're fine putting in more. But it's better than going to a commercial underwriter who's going to charge double that because they need to make a profit.
Right.
and they don't want to take a loss.
So it's kind of like self-insurance. So right? So it's kind of like self-insurance.
Like self-insurance, we might think of something that exists at the firm level. And this is self-insurance kind of at the industry level.
Right,
Okay,
exactly.
yeah.
Right,
So,
exactly.
so one of the things that comes up immediately if you type in American P&I Club into Google is it says it's the only American insurance club. And there are a bunch apparently in London. And actually, I would like to talk about how London became like a big insurance capital in general. But why is there only one American insurance club?
Okay, well, then we'd have to go back and talk about how the American Club was born, right? So, so historically, the origins of organized insurance really are into the financial center of the London market. Actually started, I think, with remind me, Steve, with some brokers in a coffee shop in London that, started to decide, well, it's the same concept of how the clubs developed, but at the more fundamental level of the basic, well, we don't want to risk losing the cargo or the ship en route. So, underwriters were kind of born through that process. But the American Club actually was born much later. So the American operators historically were insuring with the London clubs. And then 1916, the Americans were not in World War I yet, right? The UK was. So the UK at that time passed what was called the UK Trading with the Enemy Act, and which basically says, if you are, trading with my enemy, then you're my enemy. And at that time, the United States was not in. Certain American operators were still involved in certain types of trades. And the UK then, this act prohibited a lot of American operators from continuing to have their insurance with the UK clubs at that time. So back then, I think it was the largest U.S. broker, Johnson & Higgins, I think at that time, came together with ship owners, industry lawyers, and lobbyists and legislators, and realized that they were going to have to create something in the United States. And I think that it's very interesting how it's kind of very timely of what's going on in the United States right now, because we're seeing that, in terms of our peers, in terms of other countries, even our allies or even non-allies, we've kind of fallen behind on the maritime side, right? So in the industry, like we used to be the #1 maritime nation in the world, and now we're definitely not. And so they came together and they surveyed the American operators to see, would you be interested and would you join an American P&I club that would fundamentally work the way the London clubs would already work? And they got a lot of favorable response. And then within the year, they had enabling legislation in New York State, which created the structure, because it didn't exist before that and needed to have a regulatory structure. Right. And on February 14, Valentine's Day, 1917, the American Club was born. And since then, it's not an easy thing to put together a club, because you start from scratch, really.
Right.
And so since then, we have been the only club, and we've taken the United States through 2 world wars since then. But also been a part of this whole ebb and flow of the American maritime industry. Yeah.
And I was going to say, that doesn't mean that our members are only American.
No.
So historically,
explain this. Yeah. So explain why that is.
I mean, it's just the name now is the American Club. Okay. And then you have the Swedish Club, you have the London Club, you have the Japan Club.
But there are members who are
global.
So
all over the world.
Right. So I would say maybe 30 years ago, we were probably 80%, maybe even more.
Yeah.
U.S.-based membership.
In the 90s, we went
right, more of a globalization effort in the 90s.
Wait, how do ship owners decide which club to be a member of?
A lot of it's service-oriented. Yeah. Again, who you know, right? You have a friend who owns a ship, and he's like, I'm with the American Club, I'm with this club. Yeah. Have a great experience with them, close with the claim handlers, underwriters. If I need something, they pick up the phone. I can talk to them. I'll make the introduction. So it could be as simple as that. Or some people just go on Google and say, I need to join. I need P&I insurance. Where could I go? And maybe if they're American, they see American P&I Club.
Is there like a maritime insurance comparison site where you get all the different rates or something like that? That'd be pretty fun.
I don't know about that. But there is an international group of P&I clubs. Right. I don't know, Steve, if you want to talk about that, how that works.
So there's 12 international group clubs, known as the International Group of P&I Clubs. Collectively, we insure 90% of ocean-going tonnage. So being a member of one of those clubs, it effectively, the same way the clubs work together and they pool risks, the group works together in the same way. So being a member of the international group, it allows you, and there's a few core functions of the IG. As a reinsurance director, selfishly, I'll say the most important is the reinsurance purchasing power that the group clubs have. Yeah. So collectively, the 12 clubs come together every year and they purchase policies. I think it's the largest reinsurance policy in the world. There's roughly 85 separate reinsurers on this, various points of the world. And we insure risks up to, well, we provide cover for about $8 billion per incident, but we buy reinsurance collectively with the other clubs up to $3 billion. So it's fairly unique because they are competitors of ours, but together we realize the best thing for an individual ship owner is to have this group purchasing power, and allows us to buy high levels of reinsurance at pretty inexpensive cost.
It's so interesting because I guess like insurance per se is all about pooling, right?
And
so there's like layers and layers
the risk,
of pooling.
Right? Spreading the risk in sectors.
So I certainly want to get more soon to like the sort of the role of this P&I insurance within the context of the war now and so forth. But one quick question I have, you mentioned that entities contribute based on their tonnage.
Yeah.
And, you know, when you use the driving insurance analogy to talk about liability, you know, there are various factors that go into how old are you? Yeah. Have you taken defensive driving? How many tickets you've gotten, et cetera. Why is tonnage, which is not a metric that would suggest risk to others, in my mind, an important proxy here?
No, it's not a risk factor. It is how we multiply. The rate is per ton. The rate per ton comes from all of those risk factors. I don't know if, Steve, you get it?
See what you're saying.
So one might pay $1 a ton, somebody else pay $2 a ton, somebody may pay $5 a ton.
Oh, I see. Okay. So it's not that there's like a fixed per ton?
No.
Okay, so talk about that pricing of...
Yeah.
Got it.
Yeah.
It's good. Not all tonnage is created
yes,
in
exactly.
a sense, right? So if you have a small barge, for instance, that doesn't have any crew, it's just carrying coal up and down a river versus a large cruise ship where you have multiple crew members and passengers on there. You know, that 1 ton, if you will, on each vessel is not the same.
So they're going to get priced differently.
They would get priced differently.
Okay, so it's not really about...
It's not about... Tonnage. It's just a measuring tool.
I see.
It's just a measuring tool. But like, let's say you have the same sector, you have the same type of ship, a lot of the same factors. The smaller ship's going to pay less than the larger ship simply because of the tonnage, let's say. So they might both be charged at $5 a ton, for example. That is also a factor in... assessing limitation of liability.
Do the clubs play a role in like ensuring training of the crew and things like that would be proxies for safety?
Well, this was going to be my question because one of the other reasons we appreciate insurers here is because like they're arbiters of behavior, right? And especially at a time when a lot of governments seem to be, you know, stepping back from certain markets, it's often like the private insurers who are saying like, this is what you need to do in order to get insurance. What are the requirements for ship owners in order to be eligible for club membership?
Great. That's a great question. So one, there are a lot of requirements, and yes, loss prevention is a big thing that also differentiates us from commercial underwriters. If you go to the website, you'll see a whole section on loss prevention. We do look at the quality of the operation. We do look at the experience of the people that are running the management. There are warranties as well. So number one, you have to be of a technical level in terms of quality. So that we're going to get a little bit complicated here, but okay, so ships are also subject to other requirements independent of the club, and that's subject to the requirements of their classification society. So the classification society are like the surveyors, the technical arbiters, let's say, that come and make sure that the ship is of a certain quality technically. So you have to be we call it in class, is what we call it. That's definitely a requirement. And then, of course, we also require that you are conducting only legal trade. So that is another aspect of that. I will hand it over to Steve to add other aspects on the underwriting side.
The main, I mean, we do management audits as well, obviously. So we bring, because sometimes it's a startup, right? Which is tough because there's no history there to see where they've been. Ideally, as an underwriter, you're looking at a client who's been with another club and is looking to switch. So they come over, you see a loss record, you have a pattern, you know where they're operating, what they're doing. When it's a startup, it's a bit more difficult than that, where we'll go out. And again, sometimes it could just be proactively. We haven't met this member. Let's see them in person, what they're up to, get on their ships.
We do condition surveys, from that perspective. Quite often we would do a condition survey.
So we would do, in that case, like a pre-entry condition survey, where if the vessel is older than 10 years of age, we'll say we need to see it. Even though it's in class, we just want to make sure from a P&I perspective
our requirements
that there's certain things that check all the boxes for it to come into the club.
Wait, what actually constitutes risky behavior on the part of a ship? Because again, if we go to the driving analogy, like, okay, speeding is bad. That would be risky. Driving drunk would be very bad. What's the equivalent for ships?
Bad.
Well, the other thing that we look at is the history and the claims record, right? So we would see the incidents and the types of incidents. So if we see patterns or trends, a lot of times it has to do with their trading. So certain trades might be a little bit riskier than others. And that just comes from our actuarial analysis. So each club also takes their portfolios and analyzes the trends on the claims, and you'll determine the levels of risk and your risk appetite with that. So like, for example, our experience has shown us that container ships have certain types of risk that might not be the same as others. So while some people might look at a container ship and say, okay, well, they do liner business, so they're quite organized, right? They're quite sophisticated.
What's liner business?
So going from one port to another often, right?
Yep,
so that means that they're very familiar with the two ports. The people are very familiar. The approach of management is quite sophisticated. And then you might look at it from a risk perspective and say, okay, how much are each of the containers worth in case there's an accident and they fall? But you have to think bigger than that. So for example, if there's a casualty on a container ship and it's a total loss, in any seaway, in any ocean in the world, the catastrophe risk is much different than, let's say, a bulker that might sink or a tanker, because those individual containers, for example, will start to pop up and float to all different places on all different coasts, wherever, whatever is adjacent to the sea that it has sunk, that it sank in. In which case, though, part of the liability includes cleaning those all up. And those types of containers are considered hazardous waste. So there's a special disposal process that has to go. It can be quite expensive. It can also cause danger to navigation in seaways. So you see what I mean? So really, you look at the type of ship that you're looking at, and you look at the type of claims that it might, that can possibly arise. But we look mainly, Steve, I would say, we look at industry, but we look mainly, each club will look at their own experience and decide what they classify as risky behavior. Right. We analyze claims, and we learn from the claims to decide what we think is what we're willing to tolerate and what we're not willing to tolerate, or what we're willing to tolerate, but we're going to charge a lot more, for example, because the risk is higher. I don't know if you wanted to add.
No, I was going to say a lot of it too is human error. So you could do all these actuarial studies
and you still
to
have
say that this vessel operating in this region is likely to have X amount of claims per year, but you can't account for a crew member not sleeping or falling asleep at the wheel, basically, and causing an accident, which has happened. So a lot of it's human error, not being trained properly, small things. I mean, as P&I insurers, people look at us and think, large oil spills, wreck removals, the big headline claims, but our average claim is about $20,000 or $30,000 per claim. So it could be a small crew claim, a cargo claim. So these are the things that add up and determine how a P&I club is operating, not so much the one-off big incident.
And sorry, just wanted to add one more thing, going back to the original question that you posed in terms of what is our role in terms of training, let's say, or loss prevention. So while we are not the primary people or group that's responsible for training crews, because there's crew managers, the operators themselves have to do that. The training that they get in the schools that they go to and stuff are really... What we do, though, is based on our analysis of our claims, though, we identify gaps, we identify issues, we identify trends, and then we do actually have programs that enhance training. So from whatever they're doing, we will add things. So you'll look on our website and you'll see that we have regulatory training that the owner can use to actually track the training of their crews, that make sure that they know certain minimum standards of the regulatory knowledge. Let's say, are they familiar with how to handle like the collision regulations, for example, and other types of modern regulation for navigating at sea. We've also done vlogs, we've done interviews, we do seminars, and then we also do like a good catch series. So you'll see that we take our cases and we analyze near misses. And then we identify what our owners and their crews and their people ashore can do better in order to prevent that in the future.
So, speaking of human error, I have a personal question, which is, this is kind of Odd Lots lore, but I'll repeat it for people that don't know the story. But many years ago, I guess 4 years ago or so, it feels longer, doesn't it?
Yeah.
Okay, 4 years ago, my furniture got stuck on a container ship called the Ever Forward that ran aground in the Chesapeake Bay. And I think an investigation found that the pilot had been using his phone or something, which is kind of crazy to think about. I didn't see any insurance payout from that. I know my property wasn't like actually damaged, but it was kind of annoying not having a couch for a couple months or however long it was. If something like that happens, what is the actual distribution of the insurance payout? So who does it actually flow to ultimately? Like, does it eventually reach the customer who's shipping stuff on these ships?
There's not like a straightforward answer. There's a lot of dependencies that go along with that, and it has to do with, the contract that you have, right? And the various insurances that are placed. Now, to a certain extent, there has to be a certain limit on what could be considered too remote, for example. And under certain regimes, you would probably have to have physical damage in order to be able to claim the economic loss related to that. That is probably the reason why a lot of times when you ship things, they ask, do you want insurance so you can insure yourself? Because there's no guarantee that ultimately that will get up to the P&I Club, for example, because it just flows into contractual liabilities under that.
But the shipper would have cargo insurance as a whole to get from point A to point B. And obviously part of that is it's going to be on a vessel most likely. Yeah. So if the ship owner is negligent and they're found liable for that loss.
Yes.
So like you said, he was on the phone, vessel grounded. Then the cargo underwriter would go after the owner, which ultimately gets covered by the P&I clubs.
I see. Okay.
By the way, I'm on your website, and you guys have some great posters, these safety posters that people should go check out.
Do they say don't be on your phone when you're navigating?
There's one that says...
as simple as that.
Yeah, there's one that says...
stuff related to fatigue.
I kind of want to get one of these framed, like for my house. They're really cool looking. I'll blow it up. But like there's a feed your focus one, shut off personal cell phones. So I see you guys, it's like safety stuff.
Yeah.
Anyway, people should go check these out.
This will go out to all our members.
Yeah, that's what I'm saying. So I'm telling you, but also listeners should just go out and download these because they're pretty cool looking.
We also, sorry, just so you said that, something that could also apply to people not in the maritime industry. We have a whole series related also to like sexual harassment that creates awareness for you to understand what that means. That simple things that even based on certain cultural or even habitual type of behaviors that can be considered sexual harassment creates awareness for it. It's a really fantastic
there's a lot of good there's a lot of good resources here. All right, let's talk about like the context of this conversation within the war in Iran. And the reason, the issue to my mind is like, okay, so are you affected by it? Because when I think about the situation, I'm by and large not thinking about risks that ships are going to pose to others in the context of war.
Yeah.
Right.
As opposed to risks to the ship. So like talk to us about like the degree to which for your
P&I gets involved.
is a factor, or the Iran war is a factor in the world of P&I insurance.
Well, I'm going to give you the big picture, and then Steve will analyze it. We'll break it down. So traditionally, war has its own special sector of war underwriters, war insurance. The P&I standard policy excludes liabilities that arise out of war acts. Okay. However, there is an excess level of cover that is offered by the P&I Club simply because the standard policies are limited by the value of the vessel. Okay. I'm going to hand it over to Steve.
We've been talking about P&I and liability. Yeah. But if you're a ship owner, you come to us for your P&I insurance. Yeah. You go to a hull and machine underwriter for hull and machinery for the vessel's value, what's on the ship, right? Okay. So you have two separate towers of insurance. Yeah. So we cover the liability, they cover the hull, but because we exclude war risks, it's traditionally offered. There's a few places they could go. Traditionally, the hull underwriter will give you war risk cover for P&I and hull up to the value of the ship.
Okay.
So if you have a $10 million ship, you're insured. So the ship sinks, it's a total loss. You're covered for $10 million. Underwriter, writes you a check. There's a pollution element. They'll cover $10 million of that loss as well.
Okay.
So that's traditionally P&I, but because we excluded the hull war underwriters,
it's just to be clear. If a ship is sunk in the war,
right,
then there could also be a liability on the part of the owner for the pollution caused by their own ship having been sunk.
Potentially.
There's a lot of
it
nuances.
Depends. There's a lot of nuances to that too. It has to do with also convention. There's certain international conventions that exclude if it's subject to war, but then there's certain national legislations that carve that out. So it depends on where it might happen.
Sorry, just to be clear though, like when you talk about you said there's a war exception, or you don't cover war risk?
We don't cover it. Standard P&I cover
level
would exclude it.
But why would P&I ever include war risk? Because the question is war, to my mind, does not.
What if a crew member dies? That's P&I. That's liability.
So that is okay. Yeah. I see. Yeah. Okay, so this is really important.
Yeah.
So a crew member's death in a war would be, or a crew member's death would be P&I.
Yes.
Right.
But you don't, in a war, that you do not.
Correct.
Unless.
Got it.
So we mentioned pollution, we mentioned crew. Yeah. Wreck removal would be one. So, vessels going through the strait.
Yeah.
There's mines. If it were to sink and it's a wreck and it's in a shipping channel, eventually, and let's say the conflict ends, well, now you have a wreck there that needs to be moved.
Yeah.
So P&I clubs would have to step in and remove that wreck, which will cost a lot more than the value of the vessel. Yeah. So what the P&I clubs do offer is what Dorothea mentioned, excess insurance. So excess of the hull's value, knowing that a wreck or pollution event could likely not crew, but a larger loss could breach that 10 million or whatever the value is, but in this example, 10 million. You breach that threshold. The P&I clubs, as part of our collective reinsurance buying, we buy reinsurance for war P&I. And every ship owner who's entered in any IG club every year pays a small amount. It's not a lot, but they pay a small amount for that coverage. So we fill that gap.
So just to be clear, just to spell this out, in a war,
right,
you do not provide war insurance. The vessel would go to some other commercial carrier.
Yeah. And they would have that in place.
And they would have that. Yeah. But the P&I Club does offer this excess based on the reinsurance purchasing power beyond what the commercial carrier may offer.
Yeah,
okay, this is great.
And effectively, we're buying it on their behalf.
Yeah, got it.
So I have what might be a dumb question, but why are all these different risks so bifurcated between different players?
Yeah.
Why is there a separate whole protection provider, a war risk provider? If I'm buying home insurance, for the most part, I just go to an insurer and it's okay, we're going to cover your roof damage as well as whatever else might happen. I don't have to go to 3 different insurers for the most part.
Yeah. I think it comes out of exclusions. So originally the hull underwriters didn't want to offer coverage for liabilities because like Dorothea said, they didn't know how to price it. It wasn't their forte. So there was a gap in cover. Yeah. Right. Yeah.
I see.
Yeah.
So P&I clubs were born out of that. So now you have a club and you want to be able to project what your claims will be in a given year. So the club members are insuring themselves or each other for what I'll call predictable risks, right? Going from port A to port B with a certain cargo, accidents happen. But if something is a little more specialized, so if you have a vessel operator who's involved in drilling and production operations, that would be excluded as well because that's not a mutual poolable risk, because that might be a one-off where you may be doing that with your vessel, but the 3 of us may be saying, whoa, we don't want to cover that.
Yep.
That's a complete different risk. Yeah. So war falls into that.
Yeah, that
it's hard
sense.
to predict. Yeah. So the P&I underwriters excluded war traditionally, and now created there's war clubs, or Hull would step in and offer limited war cover.
Yeah, I mean, it's important to keep in mind too that war risk is not actuarially stable, right? It's not like the rest of the risks. It's really just subject to geopolitics and national relations, between countries. And it's just based on that. Whereas most other types of insurance is actuarially stable. Not always predictable, but actuarially you can analyze it. Right. You can't really do that for war. And then the one thing I think is important to note, and this has been a topic of discussion, I think, on the war side, is that during the year in peacetime, it's very cheap.
Yeah.
Okay. Yeah. It's very cheap. And so I know that there was a lot of talk about the cancellations and stuff like that. It's really, they have to do that because they're not underwriting based on the ships transiting war areas. They're underwriting based on trading in peaceful areas. So once an area then becomes subject to a war act, they do have to be able to re-rate that. So it's not, and so even though they gave a notice of cancellation.
So these are the headlines we saw at the beginning of the conflict saying that like war risk insurance has been pulled right at the start of a war, which was very confusing.
For a lot of people, confusing. Yes.
Yeah. I was getting Instagram reels sent to me of people trying to explain it, and complete misconception. And when you're getting reels on P&I insurance, something big is going on.
I don't know if you want to explain why the P&I clubs had to give that notice that we gave. Because everybody said, oh, the P&I clubs are canceling war. We don't cover war, but in certain instances we do. Why don't you explain where we cover it?
Right. Just to kind of back up a bit on what the cancellation means. It's really a cancellation of the rate, not of the cover. So everyone was saying, oh, these vessels are trapped because they don't have insurance.
It's not true.
And, Lloyd's in London is almost doing this to get back to the U.S. First of all those, not all, but many of the underwriters at Lloyd's are American companies. So it wasn't the UK saying, we're going to get the U.S. back for this. We don't support the war. Pull insurance coverage. The vessels are trapped. That's not the case. Every war policy, even though we're not war experts or war underwriters, the way it works, every war policy has a notice of cancellation clause saying if a war were to break out, like you have here, and vessels are now in the Gulf, well, we didn't price for that. We gave you a cheap rate because you're sailing around the world. Now you're in a war zone. The risk changes. So we cancel your policy, meaning we cancel the rate you paid, give you 3-day notice. You're covered if something happens. So if you're struck, you're still covered, right? But now, after that 3 days lapses, you have to buy your cover back at a higher rate based on
if you're trading there. If you're not trading there, it doesn't affect you at all. So if you're trading there, go ahead.
So that's what those were the headlines, the notice of cancellation. So it looks like
this is so helpful.
But why did the P&I clubs give a notice?
Right. So P&I,
because I think that confused people.
Our mutual risks were not. So anything that's pooled and has this excess war was not impacted.
At all.
But we also offer cover to charterers. So not just ship owners, if you're chartering a vessel. And
do we know what a charter is?
No. Tracy's not. I have no idea.
A charter, it's kind of like when you lease a car, it's like you're chartering it. So you don't own it.
You don't own it.
You're paying somebody to use it. Okay, so go ahead.
The owner is liable most of the time for big oil spills, wreck removal, whatever it may be. But a charterer could be found liable for some of this. So a charterer's risk, because it's not pooled within the EIG and there's separate reinsurances for that, that includes war.
Right.
So that's always been a pass-through. So we will include charterers P&I war cover. And because we received a notice of cancellation from our reinsurers, we tell them we have to cancel your war cover in the Persian Gulf, but give us 2 days and then we're going to come up with a solution, which is what came up. We had a solution. They could buy it back at a higher rate.
How much did the premium actually change?
It depends on where they were calling, but it was, to give an example, there was like one vessel, we saw their war slip, their traditional war before the war broke out. They were paying about $15,000 a year for that. And then when the rates first came out from the underwriters to get the vessel out of the Gulf, it was going to cost about $60,000. Just for a 7-day period to get it out. Once the strait closed and there were mines in the strait, there was a separate notice given if you're transiting the strait. So now you have a war, we call it a buyback. It's a reinstatement of the cover. You have your war buyback for the Persian Gulf. You're covered in there, but if you're transiting the strait, there's a new exclusion that may apply with new rating.
Wait, sorry, you said mines in the strait.
Right.
Are there definitely mines? Because I think there's been some discussion of that. And then B, this kind of gets to the question that Joe mentioned at the intro. I know I talked about insurers as enablers of behavior, but when you're in a war situation, I assume people also don't want to be killed.
Exactly.
So even if they can get insurance,
that wasn't the factor. Exactly.
That's what we wanted to get to.
Yeah.
That the vessel, they weren't trapped because there was no insurance or because the rates went up. They just
don't want to put their crews at risk. No, they don't want.
And you don't want to put your crew at risk.
And people should know though too that ultimately the decision to do that type of course is for the master of the vessel to decide. It's not, you can't direct him to do something that he believes will put the crew and the ship at risk. That is rule number one. I do want to comment
on core maritime principle.
Yes, exactly. The other thing I wanted to mention is that actually I was speaking to one of our colleagues that manages our European subsidiary, and he has extensive experience in hull and on war. I was given to understand that the ships that were trapped on the inside were given different rates than ships that were looking to go in and out. So the ships that were trapped, it was taken into account that it's not an initiative to trade in a high risk area, that they are trapped. And if they want, the rates were significantly lower to come out if you were trapped than it was for those ships looking to actually transit to do regular trade through the high risk. And in those cases, when they were looking to trade, the rates were ranging from anywhere from 3 to 10% of the hull value. The ones that were initiating this type of trade, whereas compared to the ones on the inside, the average rate I was told was about 0.5. It's big. It's a big difference. Yeah. So that is very important to understand. And insurance was always available. It's just whether you wanted to do it really ultimately. And the operators and our members that we spoke to all made it very clear that the safety of their crew was much more important than everything else. Yeah,
it makes a lot of sense to me that like certain types of insurance that end up in this sort of self-insurance model are the types that are like highly stable and predictable. Tracy, do you remember 2014 AOL? It was still a public company.
Oh wow!
And I don't know if anyone remembers this. A little bit of insurance history. Yeah. The CEO said on its earnings call that the company's profits had taken a hit because one of their employees had a very high complicated pregnancy. And it was so big that he noted. And then everyone sort of figured it out, I think, who it was. And it was like a pretty egregious like privacy violation. Wow. Yeah. But they were self-insured because it's a large company. And over time, you're like, your health insurance costs are going to be stable from one year to another. But it was just, I guess, such an expensive pregnancy that he mentioned it on the call as having affected earnings that quarter. But it does seem, this really clicked that when you have a type of insurance in which payout distributions are roughly stable on a year-to-year basis, that is the natural time for the sort of nonprofit self-insurance model of some sort.
Well, actually, though, there is a nuance to that. Okay. So because it's not really always stable. Okay. It's just spread out enough.
It's spread out
that there's a resiliency to it.
Okay.
They're able to withstand the volatility. Yeah. The model is able to withstand the volatility.
Well, since there are multiple clubs that carriers can choose, do clubs risk like sort of snowball effects? Carriers defect, and then suddenly you have fewer members, and then the risk is like magnified. Like, is that a tension from one club to another? I wouldn't want to be part of a small club.
We're a small club.
Oh, sorry. I wouldn't want to be a member of like a five. Okay. I mean, like a really like tiny club where it's like, the two of us we're going to insure each other.
Yeah, no. It has to be no club is that small.
This is what I'm saying.
Yeah. No club is that small.
Yeah. This is what I'm saying.
Yeah.
Like it feels like you need some critical mass.
Right. It's relative. Like I said, the clubs collectively insure 90% of ocean-going tonnage. Right. Yeah. So being a smaller club is still a big club.
Yeah.
Yes, exactly.
Saying, like, there would be a level in which mutual insurance doesn't make any sense.
There are rules in place to deal with certain things like that. Like it's true, you actually don't because P&I has a long tail, right? So like some claims could take, some claims are still open 10 years after and sometimes even longer. So that's why actually the mutual system allows for multi-year openness.
I would be part of
that. But yes, there are we do have agreements in place that protect us from things like that. Yeah.
And the way the pooling and reinsurance mechanism works, it's all relative to your size.
Okay.
So so the clubs collectively pool claims, individual claims between $10 million and $100 million. And then beyond that, they're buying this reinsurance up to $3.5 billion. But what you pay is there's a formula, which we're not going to go through. No. It gets complicated, but it's based on your relative size. Yeah. So if you're a smaller
and
club,
risk factor.
You're paying less for these large maritime casualties, where a larger club is going to take a big hit, even if it's not their claim.
So it's all scaled.
So it all scales.
It's all scaled, and it's quite fair.
Right.
And the concept actually is that everybody pays their share over time.
Right.
Yeah.
So
what you take out, you need to put back in.
Right.
And that's at the club level and at the group level. The group level. Let's say. Yeah.
Just going back to the Strait of Hormuz for a second, there are some ships from certain companies that have been like running through despite everything going on. And the one that springs to mind is Dynacom. And I sent an email to them asking if I could get their owner,
the captain
on Odd Lots, and I haven't received a response, perhaps unsurprisingly. But like, what is enabling them to get through versus other ships?
Yeah, I don't think that that's something that we'd be able to really. They're not our members. We're not familiar. We do have another member though that was hit. The other thing I wanted to mention is that despite the fact that the P&I clubs are not the primary insurer on a case of war, we actually do take an active part. So we are involved. We are close to the member because we have a very close relationship with all of our members to begin with, right? We are most of the time copied on all the correspondence, so we also provide some guidance because besides the P&I side, we also have what's called an FD&D cover, and that's freight demurrage and defense. And so that helps the owners with disputes that may arise, contractual disputes. We don't insure the claims themselves, but we provide the guidance, the legal guidance. We have a lot of lawyers within the club, but we also support them if we have to hire lawyers outside to defend or to pursue any claims that they may have, and that's a legal costs cover. So a lot of the times, even on cases that we are not directly responsible for, or not responsible for, but covering, we're usually quite involved. Like I said, we're protection and indemnity. The protection part of it involves standing next to the member and guiding them. But the intricacies of any particular owner being able to cross the strait is not something that we're actually privy to. So, but I mean, the only thing I can say is that I know that there are certain factors that are looked at by the Iranians when they are attacking,
This is such an interesting conversation. It can go a lot more.
It can.
I'm looking at this article about Dynacom, the owner of the billionaire shipping magnate, Greek buccaneer George Prokopiou. That's the name of the firm. I noticed, on the American Club, you have office locations in New York, London, also in Piraeus in Greece, and then also Shanghai and Hong Kong. And I'm just curious, setting aside this current moment aside, we all sort of know that Greece specifically is one of the centers of shipping for a long time.
Number one nation,
but has it moved east over time? Okay, we know that a lot of the shipbuilding is happening in Asia. And we also know that so many of the routes are Asia dominated, et cetera. Have the financial flows of insurance moved east in the same way the physical flows? Have the financial flows of insurance moved towards Asia? I should say specifically rather than
on the insurance side?
Yeah, on the insurance side. Has insurance
not from an international
moved towards
perspective.
Asia in the same way that the trade flows have?
No, not from an international perspective. China does have its own P&I club. It's not a member of the international group of P&I clubs. They do have reinsurance relationships with some of the clubs that are members of the group. It's a very large P&I club, but it generally insures Chinese managed and
so
owned
even though
tonnage.
Shipbuilding and trade is so Asia dominated, the financial element of the insurance has not.
On the insurance, no, it hasn't really. Not from the international side of things.
Okay.
Not from the international side of things. I think even all the major traders are still insuring with the UK, Scandinavian, and the American clubs. Yeah, I would say. Steve, I don't know if you've seen anything different. I've not seen anything different.
If the U.S. starts building ships again, is that great for the American P&I Club? Would your membership automatically increase?
It wouldn't automatically increase, no, because there's no directive in any country that you need to that your insurance has to be domestic. But it would probably increase our potential to grow if we began to build ships in the United States.
Do you see any signs of that actually happening? We've done a number of episodes on how to
people who want it to happen.
People who want it to happen.
Yes. I mean, we want it to happen too. Well, we want the American maritime industry generally to become stronger. We do think it's a shame how it's developed over time. The American Club also was a part of that. Like I said. Up until we internationalized, our membership was very, very small because it was only American, and the maritime fleet was shrinking at that time. Obviously, we are the only club. While all the clubs have a presence in the United States, not all of them, but many of them, they don't have an actual regulatory domicile like we do. So if, the American Club and all of its people in the United States are probably the most significant and the deepest bench in terms of know-how of managing and underwriting maritime casualties. And we're very proud of that. We've been doing that for almost 110 years now. So we're, not us personally, but the company itself. But obviously we are very supportive, and we are actually very active, and we have relationships also with all of the agencies. We actually insure all of the MARAD training vessels. We know all of the agencies very, very well. We have active relationships, and we are very much a part of that American industry that is looking to bolster what's happening here in the United States.
Joe, you need to build a ship and then join the club.
Well, you mentioned that they're a shipping startup, so it could happen.
All right, Dorothea Ioannou and Steve Ogullukian, thank you so much for coming on All Thoughts. Really appreciate it.
Thank you so much for having us.
All right, Joe, that was a fascinating episode.
Yeah, that's great.
For sure. I feel like I am slowly getting a better handle on the maritime insurance industry. It is interesting to me how divided all those different risks are. And to Steve's point, the idea being that if you're a P&I club, you can kind of price out the risks of going from A to B with a certain type of cargo in a certain predictable manner. But if you're doing war risk insurance, that's a very different kettle of fish.
It's sort of...
That's a maritime expression for you.
Oh, yeah. Good job.
Thanks.
It actually makes a lot of sense to me, this idea that the pricing for war insurance would reset very quickly, right? Because one could imagine, say, buying a multi-year, you're going to buy this insurance and it's going to cover you for the next few years. Most of the time, there's not war. And so most of the time, you don't want to be paying a war premium, et cetera. So it's all just a trade-off. It's no one loves it. A war breaks out, so suddenly, your premiums are going to surge the next week.
Yeah.
I don't think anyone's very excited about that. But that's just the flip side for getting really low war risk insurance the vast majority of the time when war is not going to be an issue for you.
Yeah.
It's just a trade-off in terms of how long do you want to be paying for it and so forth. So that actually made quite a bit of sense to me.
It also seems like the limiting factor on ships getting through the strait at the moment isn't in fact insurance at all. It's whether you can survive.
Yeah, the captains and the safety of the crew and just being sort of a sane.
So even though insurers run the world, there are limits to the abilities of insurers, I would say, to affect human behavior.
I think it's really interesting. At first, I was like, well, how is a ship and their liability like a car where there's, but, then you see all their posters and it's saying all of these very safety
love
things.
Those posters.
No, they're really interesting because it's something make sure you're getting enough sleep.
Are your hatches tight?
Yeah, are your hatches tight? Don't check your email all the time. I think there's a drinking one too. Take control of fatigue, everything in moderation. So it's actually very similar to car. To sort of liability insurance for a car, just in the fact that like the basics of safety apply to a ship as well.
I'm gonna print out the cell phone one and get it framed and put it on your desk, Joe, as a present.
I would like that. I would like that.
All right, shall we leave it there?
Let's leave it there.
This has been another episode of the Odd Lots podcast. I'm Tracy Alloway. You can follow me at Tracy Alloway.
And I'm Joe Weisenthal. You can follow me at The Stalwart. Follow our producers, Carmen Rodriguez at Carmen Armin, Dash O'Bennett at Dashbot, and Kel Brooks at Kel Brooks.
And for more Odd Lots content, you should check out our daily newsletter. You'll find that at bloomberg.com/oddlots.
And you can chat about all of these topics 24/7 in our Discord, discord.gg/oddlots.
And if you enjoyed this conversation, then please leave a comment or like the video, or better yet, subscribe.
Thanks for watching.